Good morning, investors. You are now KleverStock with me, Shobna, serving you the latest morning bell updates today. Kicking off with the opening updates fit for our local currency. The FBMK SCI surged past of 1,600 level today as the global markets rode a wave of bullish sentiments sparked by remarks of the US Federal Reserve Chairman of Powell, who signaled that interest rate cut could come as early as September. On Wall Street, the Dow Jones Industrial Average jumped 800 points to a record high last Friday following the Powell's comments, setting the tone for Asia trading week. As the Malaysian market reopened this morning, investors rushed into equities with a renewed optimism, pushing the FBMK share up to 5.35 points to 1,602.82. The securities noted that trend and momentum indicators are pointing to further upside in the immediate term. But the firm also warned that daily social indicators are not in our board of territory, suggesting the potential short-term corrections could be looming this week. Immediate support remains at 50% fabric retracement level of 1,527, with stronger support at 1,490 and 1,444. Resistance is kept at 1,610, with the next hurdle at December 2024 high of 1,644. Followed by the stronger resistance of 1,684, the firm said in the market commentary. Among the earlier gainers, MPI jumped 1 ringgit and 4 cents to 26 ringgit and 6 cents. Nestle rose 94 cents to 92 ringgit and 8 cents, while United Plantation advanced 26 cents to 22 ringgit and 26 cents. On the active list, Magnum slipped 3.5 cents to 27.5 cents. Oxford Infotech is 2 cents to 44.5 cents, while LNG edged up half a cent to 12 cents. Analysts said the index move above the psychological 1,600 marks reflects stronger investor confidence, but shorter-term cautious may prevail as the market considers gains. We shall now look at the performance of our local currency. The ringgit rebounded at the start of the week, opening stronger against the US dollar after Federal Reserve Chair Jerome Powell signals the possibility of the interest rate cut in September. At 8 a.m. today, the local note a gain of 210 pips to 4.2035 or 4.2270 compared with the Friday close of 4.2245 or 4.2295. Bank member Chief Economist Dr. Muhammad Afizam Abdul Rashid said Powell comments at the Jackson Hole Museum last Friday as lifted investor sentiments. He indicated that the monetary policy stance may warrant of adjustments in the light of evolving of economic outlook and shifting balance of risk, he told. Market have since increased bet on rate cut at the Fed meeting on September 16th and 17th. Short-term US Treasury yields sharply fell on Friday, with the 2-year note held by 3.68%, down to 11 basis points, while 10-year yield slipped 7 basis points to 4.26%. Dr. Afizam said the shift has brightened the outlook from emerging market currency, including the ringgit, in the near term. However, the local note was weaker against several major currencies. It slipped 5.6781 or 5.7088 against the British pound from 5.6659 or 5.6726, east to 2.8545 or 2.8704 against the Japanese yen from 2.8408 or 2.8443, and weakened to 4.9210 or 9485 against the euro from 4.8996 or 4.9054. Against the ASEAN currency, the ringgit was mixed. It strengthened to 257.0 or 258.6 versus the Indonesian rupiah and firm at 7.38 or 7.43 against the Philippine peso. But it is slightly to 3.2776 or 3.2962 against the Singapore dollar and 12.9602 or 13.0423 versus the Thai baht. Moving on to economy updates. The United States planned to raise tariffs on furniture, medical, chips, and critical minerals could sharply reduce import while boosting its domestic industry. For Malaysia, economists warn the impact will be most severe on the furniture sectors, as the US currently accounts for about 40% of the country's furniture export. Sunway University economist Professor Dr. Yim King Ling said the move will force Malaysian exporters to look elsewhere. This is especially in the trade blocs such as Region Comprehensive Economic Partnership and other free trade agreements, explained. He cautious the local players should brace for the substantial drop in US demand as American customers pivot towards cheaper domestic alternatives. Profit margin could also be squeezed if exporters are forced to absorb part of the tariff increase. While downsizing is options, it is imperative that step-up effort to divert away from the US market is stressed. Analysts say the tariff plan marks a critical turning point for the Malaysian export-reliant furniture sectors, which now face the urgent challenges for finding new markets and building resilience against the trade policy shift. Moving on to corporate news update. NCT Group Next Generation Smart Industry Park in Selangor is setting new standard in Malaysia's industry sectors with 650 million ringgit innovation fund and a strategic alliance with the Canadian venture capital specialist. The fund and partnership with NSCIP, with size of 286.23 hectares size in Sepang, is the VC specialist intrusive venture capital first major initiative in Malaysia. NCT Pact of Intrusive 2 of the University of the Sea aims to attract high-value industry-driven environmental, social and governance adoptions and position Malaysia as the regional hub for sustainable future-ready growth. NCT Group's Chief Strategy Dr. Neil Foh said its NSPI is defining Malaysia's industry park model by integrating artificial intelligence, ESG standards and flexible investments structured to attract high-value, innovation-driven industries. And SIP is a testament to how we reimagine industry parks in Malaysia by harness cutting-edge of technology and the power of artificial intelligence to attract quality investments, strengthen global position and continue to sustainable economic growth for the country. This is in the line of the 13 Malaysian plan for high value of digital industry, it told. As Malaysia's first smart and certified management industry park and the first to receive a 5-diamond rating under the Low Governance City 2030 challenges, and SIP aimed to raise the bar to industry development in the region. According to the Foh, SIP is the next generation industry development that is responding to the structural changes shaping the global landscape, including the rising demand for the ESG integrations, smart infrastructures and investment of agility. The development of model includes a flexibility of frameworks such as build to suit, lease to own and co-investment structures, making of investment on high growth ventures to establish a longer term operation here. More than merely supporting existing sectors, SIP is attracting a high-value, innovation-driven industry that aligns with Malaysia's economic goals. SIP is further catalyzed by the investment industry program, which integrates the scaling innovation companies fund with the management industry park to drive low industry transformation, is said. Finally, wrapping up, we have major corporate developments and risks across of Malaysia. First, we have Sime Darby Property Berhad says its data center development project remains on schedule with no interruption despite of concerns that United States tariff measure could weigh on the global demand and investment inflows. Next, we have IJM Corporate Berhad says its unit New Pantai Express Sdn Berhad has signed a supplementary concession agreement with the government for the 1.4 billion ringgit project to extend New Pantai Express by 15 km and restructure toll rates. Skyward Development Berhad's unbilled sales of 483.1 million ringgit as June 30, 2025 are expected to support the growth performance alongside progressive renewal recognitions from ongoing project and sale of completed inventories. MBSB Berhad and Day One Data Center have performed strategic collaborations to accelerate Johor's digital infrastructures and economic transformations in line with the Maju Johor 2030 agenda. At last, we have CBH Engineering Holdings Berhad, wholly owned subsidiary of CBH Engineering Sdn Berhad, has secured a 52.8 million ringgit works contract for proposed data centre in Selangor. That's a wrap for Morning Bell updates with me, Shobna, on KleverStock. Thank you, investors, for choosing us. Stay tuned for the next live coming soon.